So you saw the headlines, right? Amazon just dropped some absolutely monster profit numbers. But here's what the headlines aren't telling you. While profits are soaring, the company is burning through cash at a frankly alarming rate. Now, in the next few minutes, we're going to break down why this isn't the red flag you think it is, but actually a massive, calculated, multi-billion-dollar bet on the future of AI. Stick around. You see a 38% jump in profit, and your first thought is, that's a buy signal, right? The algorithms certainly think so. But here's the thing. Smart money, our money, looks past the income statement because what the cash flow statement is showing us, well, it tells a completely different and frankly, a far more important story. And here's the whole paradox in just two numbers. You've got net income, which is basically an accounting figure, up a fantastic 38%. But then you look at free cash flow. We're talking the actual hard cash hitting the company's bank account, and that has absolutely collapsed by 69%. This kind of disconnect is what separates a great investment from a terrible one, and we're about to find out exactly where all that cash went. Okay, let's dive into this. First, we have to look at the bull case. And the good news, and believe me, it is very good news, is all coming from one place, Amazon Web Services. This thing is the profit engine for the entire company, and after a little sputtering, it is humming again. Now, what has Wall Street really buzzing here is the reacceleration. See, for a while there, AWS growth was slowing, and that had a lot of people worried. But this jump, from 17% growth to 20% growth in a single quarter, for a business that does over $100 billion a year, that isn't just growth. That's a massive shift in momentum. And that is exactly what the market loves to see. And we're not just talking about sales growth. Let this number really sink in for a second. $11.4 billion. That's the operating income AWS generated in just 3 months. This isn't just some side business for Amazon. It's a cash printing machine that funds pretty much everything else they do. And this chart right here shows you exactly why AWS is so critical. It's responsible for 2/3 of the company's entire operating profit. To put that in perspective, their massive North American retail business, the one you probably use every day, only brings in 27%. Let me be crystal clear. Any investment thesis for Amazon starts and ends with the health of AWS, period. Okay, so if AWS is such a powerhouse, that just brings us back to the big question, right? What explains that massive drop in cash we saw earlier? And that brings us to the bear case, the big red flag in this earnings report. We need to understand precisely why the company's cash generation seems to have fallen off a cliff. Here is the number that has some investors really worried. Over the last 12 months, free cash flow has plunged 69%. It's fallen from nearly $48 billion to under $15 billion. That's a $33 billion drop in real cash generation in just 1 year. That's a huge number. This is the multi-billion-dollar question every single analyst is asking. I mean, a company this profitable doesn't just watch its cash disappear into thin air. It's being spent. But on what? And right here, this is your answer. It's all about capital expenditures, or what we call CAPEX. This is the money they're spending on the big stuff, data centers, servers, all the heavy equipment. And in the last 12 months, Amazon has spent a staggering $116 billion on CAPEX. That's up from $65 billion the year before. This is the direct cause of that cash flow decline. So when you put it all together, this massive spending spree isn't a sign of weakness. It is the absolute core of their entire strategy right now. Amazon is making a monumental bet. They are intentionally sacrificing today's free cash flow to build and to own the essential infrastructure for the coming AI revolution. And hey, you don't have to take my word for it. The CEO, Andy Jassy, spelled it out himself. They are seeing overwhelming demand for AI services and are basically in a flat-out race to build enough capacity to handle it all. This massive spending is a direct response to that demand. And this spending is incredibly targeted. They're trying to build a competitive fortress in AI. They aren't just buying servers, no. They are vertically integrating with their own custom chips like Tranium 2, building these massive compute clusters, locking down the next generation of NVIDIA's best hardware, and expanding their Bedrock platform. This is a full-stack assault on owning the AI infrastructure layer. And you know what? We're already seeing signs that this huge bet is working. Sales of their custom Tranium 2 AI chip grew 150%, not year over year, but quarter over quarter. That is an absolutely explosive growth rate, and it tells you that the market is hungry for what Amazon is building. So, what's the verdict for us as investors? Well, the narrative is actually pretty straightforward now. The core profit engine, AWS, is firing again, and the company is taking that cash and plowing every last cent into a massive AI investment cycle. So, here are the key metrics you need to watch to see if this bet is going to pay off. Okay, first, can AWS sustain this 20% plus growth rate? That's number one. Second, keep your eye on that CAPEX trend. Does this insane level of spending continue, or does it start to moderate in the coming quarters? And third, and this is probably the most important one, how do they monetize all these new AI services? You need to be looking for any announcements about new revenue streams that are tied directly to this AI build-out. So that's really the bottom line here. This profit paradox isn't a contradiction, it's a strategy. Amazon is sacrificing short-term cash flow in a huge gamble for long-term AI dominance. So the question for investors is simple. Are you betting with them? Because how this plays out is going to define not just the future of Amazon, but probably the entire tech landscape for the next decade.